again. Welcome everyone to this very special United States Heartland China Association event. My name is Jason Conley. I'm the program associate here at USHCA. And I am very excited to announce our event tonight on capital flow between the US and China with Professor He Guo of University of Chicago. Professor He is going to be explaining to us tonight some of his more recent research and kind of examining some of the financial trends between the US and China. Before we get started tonight, I would first like to thank some of our sponsors, without whom this event would not be possible. The USHCA is a small 501c3 bipartisan nonprofit, and we are very fortunate to receive funding this year from the Ford Foundation and the Henry Luce Foundation, without whom tonight's event would not be possible. These two events continue to support everything we do and make a lot of the great events that we've been able to put on this year possible. So if you'd like to learn more about them and some more of the events we do, we encourage you to check out usheartlandchina.org. Here at USHCA, we believe not all bridges are built of concrete and steel, and that a healthy US-China relationship is not only essential to political prosperity, but also to economic development right here in the US heartland. Another thing I'd like to mention before we get started today is just a few housekeeping items. At any point in the webinar today, if you'd like to ask Professor He or myself a question, we will try to make time at the end of this presentation to answer some of those questions. You can do so by navigating to the bottom of your screen and selecting the Q&A icon. You can see it circled here and right on my screen. At the end of the event, we have prepared a survey. If you have 2 minutes, 120 seconds, we invite you to just kind of give us some feedback on your thoughts on the event, anything you'd like to see coming up. We'd really appreciate that. So without further ado, I'm very excited to introduce tonight's speaker, Professor He Guo, who is a Fuji Bank and Heller Professor of Finance at the University of Chicago with the School of Business. Professor He's recent research focuses on the role of financial institutions in the 2007 and 2008 global financial crisis. At University of Chicago, he teaches an elective MBA course, China's Economy and Financial Markets, and is conducting academic research on Chinese financial markets, including stock market, local government debt, shadow banking, and interbank markets, together with recent regulation changes. His research has been published in leading academic journals, including the American Economic Review, the Review of Economic Studies, Journal of Finance, the Review of Financial Studies, Journal of Financial Economics, and Management Science. Professor He received his bachelor and master's degree from the School of Economics and Management at Tsinghua University in China, before receiving his PhD from the Kellogg School of Management at Northwestern University in 2008. He's been named a 2014 Alfred P. Sloan Research Fellow and has won numerous awards for his outstanding scholastic record. And before joining the Chicago Booth faculty in 2008, he worked as a stock analyst at the China International Capital Corporation in Beijing in 2001 and visited the Bentheim Center for Finance at Princeton University as a postdoctoral fellow. I was talking to Professor He a little bit before this event got started, and he mentioned his recent travel to China from mid-June to early August and how there's been a lot of intriguing things going on in China financially as of late. So we'd love to hear more about that. And I'm sure we're all very excited to hear your presentation today, Professor He. So thank you again for being here. I will turn it over to you.
Thanks a lot for everyone coming to this event. Let me share my screen. All right. So thanks again. The title I changed a little bit on this potential financial decoupling. I know that the original title is the flows and the winners and losers. I feel maybe much easier to keep the winners and losers discussion in the Q&A. And my plan will be just spend about 30 minutes ish on talking about the big points I would like to go over, and then we'll leave about 1 hour for the Q&A. Okay, so and by the way, this talk, because the big picture wise, I draw heavily on Xinxin Li's presentation at the BFI China that I'm serve as a director. All right. So let me start with saying, there's a lot of talks about the US-China decoupling. it's it's not just the U.S. China. It's just the driver of the deglobalization and really just expedited by the unexpected outbreak of the COVID. So I believe that everybody knew that. The scale is massive, I guess, that are relative to the previous rounds of deglobalization. And it's also that it involves so many different aspects. And today I will talk more about a financial decoupling, just because that this is my research expertise relies on. There are a lot of other decoupling, for instance, like trade decoupling. That thing was initially hit the relationship quite heavily, but seems like dwindling down, and it seems like in terms of the price may have some effect, but in terms of the trading, it's not that much. In terms of quantity, then not that much. Now then there's this FDI decoupling. What's the FDI? This is a foreign direct investment. This has a much bigger impact on relocation and the fragmentation of global supply chain. And I saw today that there's another Wall Street Journal saying that the computer supply or car supply gets disrupted. That's obviously, I don't think this is really about because of the U.S.-China thing, but I do think that nowadays that the supply chain, the disruption become more and more often. Okay. The fourth bullet point perhaps is the things that are really catching eye: Huawei, ZTE, and the TikTok. And I perhaps forgot to put instead of a rising technology rivalry, but also the data control that become really the central issue in this debate. The fifth bullet point that probably you don't feel that much, although that when I went back, in the past several months, I sort of can feel the potential impact on this education part. And the last bullet point is always things that are hovering around in the discussion when I go back. Not that much here, to be honest, but when I go back, those are often the topics on the dinner table. So again, I will focus on financial decoupling. Just leave all the other things aside, but when we do the Q&A, I'm happy to discuss on. Okay, so when we talk about the financial decoupling, then there are two kinds of things that I could talk about. One is the macro side of it. The other is the micro side of it. Okay, for the macro side of it, I would like to just zoom in one particular issue, which is this currency. Okay, so I will talk about the RMB and RMB internationalization. I didn't put it into my slides, but there's a recent push by our central bank, China's central bank, which is a PBOC, People's Bank of China. They're pushing out the digital RMB, or they call it ECNY, or sometimes they call it DCEP. I can discuss that more if you have interest. Then the second bullet, bigger category will be the micro side of decoupling, and there I will go through certain like the policymakers and the lawmakers are proposing to break the tie. All right, so let me start with the macro and then move on to the micro. Okay, in terms of the macro, you can see here is what I drew is basically two time series. The light blue, light blue here, light blue is the dollar index. So dollar has been, going down and up, and recently, because of the COVID, it's initially going up and then going down. And now it's hovering around, probably it's stabilized. But obviously, it really depends on the Fed policy. What I'm plotting other side is this a CNY and the USD index. It's basically exchange rates. So the way that I plotted it here is just if it's going up, that means that the Chinese yuan appreciating against the USD dollar. That's whatever on top of the USD valuation, right? It's just a relative pricing here. So a couple of things that I noticed is that here, this is a repegging of a USD, repegging to USD during the great financial crisis here. Okay, it become really flat. It's about, at that time, it was like a 6 point something. And then 7.2, sorry. And then appreciates. And then there's a August 2015 reform, considered to be not that successful reform. I will mention it later. And then up and down. And you see that initially when 2000, especially when the COVID hits, Chinese yuan depreciates quite a bit. Now it's going up again just because the recovery is really real back in China. Okay, it just tells you that in the sense that there's no pegging. I won't say it's pegging. It's really like it's a managed system. Which kind of the necessary if the Chinese economy become a really, really big. Okay. The other thing I want to mention, it's also played important role is there's a big or noticeable, or I would say that it's something you cannot ignore, of the interest rate spreads between RMB and the dollar. It's partly two reasons. Obviously, one is that the U.S. monetary policy has been very loose. China is kind of getting, very carefully implementing the monetary policy, but overall, because of the growth there, so in a way that interest rate in the long run will tie to the economic growth, and this is basically the way that explains the difference. And think about it is that the combining these two, as if you were the trader or some like academia, you will feel like, oh, wow, this is a great investment opportunity, just because that if you buy the RMB and then you earn or like the treasury in Chinese, right? Chinese treasury, then you get the 3% rather than the 1%. So there's a 200 basis point or 2% over in gain, and yet that you pretty make you're sort of sure, or if anything, that I'm able to bet with you that in terms of exchange rates, I don't think that the Chinese Beijing would like to make it a move extremely volatile. Just that's not in the interest of Beijing. And think about it, Beijing still have a lot of reserve to managing the exchange rates. So given that, that's almost like really, really profitable opportunity to just investing in RMB. Okay. The obvious thing then saying, okay, so if that's the case, then seems to be that RMB is a very hot goods, which means that there should be a lot of people to get in of it. The reality is that RMB's share in global monetary system is very low. As that's just everybody knew. But let me give you some numbers, right? So the first thing you see is share of SDR basket. That's something that for a while that at least the domestic media play, make it a big deal, but it's actually not at all. It's really just a teeny thing. But CNY was part of the SDR. SDR is a World Bank reserve currency. IMF reserve currency. If you want to know more, I can explain to you the definition. But basically saying that there's some parts of the official recognition by IMF that the CNY accounts for 10% of the reserve currency. Okay, but that doesn't mean that everybody needs to use them, right? It's just the recognition of that. It's still market decide how much you want to hold in terms of reserve currency. Here is shares of global foreign exchange reserve. It's 2.45. Okay, it's not that bad. I guess that on the, recently increases slightly, but it's not like a dramatic change. The global trade finance market is about a 1.73. Global payment system is about a 2.11. So more or less like 2%, which is kind of minuscule relative to the sheer size of China's economy. So it has been, it just has a long way to go. Okay, so why that is this? This is, I guess that I'm just, if you were familiar with those topics, and you will feel like this is something I just reiterate to you, the most important point, okay? The elephant in the room is the so-called capital account liberalization. It has been significantly slower than expected. There are three reasons. One is that, it's clearly not a conclusive statement that open capital accounts is the best way to arrange a country's financial system. Okay, that's the international in the circle of international, public intellectual, IMF people, or World Bank, or even BIS, Bank of International Settlement. Those people who not only knows the U.S. history but also knows everything from a very broad perspective. It's not clear at all that take a free capital accounts is the best way to go. Okay, so therefore that there are historical lessons. If China goes take the full capital liberalization, that bad things could happen. Therefore, they're very, very careful. China does have a very vivid bad memory, which is August 2015. That's what I was mentioning, when the depreciation quite a bit and then outflow a lot. The timing is everything. So think about it, is that when August 2015, China unexpectedly launched the reform, it just coincided with the tightening cycle of the Federal Reserve. So it's just a bad timing. Okay. And then there's a domestic reform, external reform balance. If you want to just, pinpoint one agency, like military level agency in China that was the most aggressive in terms of reform, that's the PBOC. That's the People's Bank of China. Okay. Just second to none. The president, is it called the chairman or president? I think just the boss, okay, in China. The boss of a PBOC was one of the tenured professor who received education here, tenured professor at WashU, and then he returned back to China around like late 90, and then he became the boss of a PBOC now. So they understand how these things that they should have been working in the fully market sense. All right. So will the RMB challenge the dollar? It's in the short term, no. Even with this ECNY I was mentioning, there are a lot of effort that China has been doing. A lot of them I will applaud. Really think there's a great access. If you don't know that much, the Stock Bond Connect program are one of the biggest innovation. I think that that is really nice way to kind of like push out the things, let the market decide, but still control the risk to the great extent. I can explain more later on. The other one is this, after the phase one deal that China allowed a foreign company to establish the wholly owned subsidiaries I call it was. In insurance, security brokerage, fund manager sectors, this hasn't been fulfilled largely. Occasionally, you will see that more and more US or European big houses that are opening a 100% solely owned offices, or not even offices, like just the company, establish the company in Beijing or Shanghai. So and also that Beijing realized that indeed that the security brokerage are very important, introduce some foreign players to encourage the reform or competition side for among domestic security brokerages are very important part of the steps to truly marketize the so-called wealth management business. That is something that in the next 5 years really gonna bring big change. The fourth one is just whether that there's a Chinese assets, right? It's just the Chinese assets that in terms of foreign investors, how do they, in what way that are they gonna investing in? And often the time is that it's just, there's a chicken egg thing. Initially, it must be a country grow, people show interest in investment, and then indexers, these companies who run these indexes, that start to adding on to indexes, all these things. So it has been a while of a positive sequence of moves by these big guys like Bloomberg, JP Morgan, all these things, adding on this Chinese stock. It's most of them are symbolic, just because they often the time it's only 5% or 5 to 10%. That's much lower than the China size, right? However, there's a recent setback, so I will come back to this. All right, so now let me move on to micro side a little bit, and these things maybe that you will, the numbers that you will see here, probably you heard about in many contexts. So I'm trying to give you a sense of how much the integration is. It is a really integrated. So there are several aspects. One is that there's a Chinese company were listed in the US stock exchanges. So 2.1 trillion total market capitalization. This is the most recent. December 2020, then the official holding is about 1.06 trillion. Remember that this number is much lower than often the people thought. This is because that this is the official holding of the PBOC holding. There's other financial institution and companies, a private holding is about 200 billion. So total is 1.2. And the Chinese holding of the US corporate stocks, bonds, there's another 200. Cross-border lending, and then there's a lot of Hong Kong exchange. So this is like the stock connected that I was talking about is intermediated by US firms. Okay. So there's another 1.5 trillion. So you think about it, this is like a transaction wise, there's a 5 trillion business. That's really big. 5 trillion USD. That's think about it. This is like often the time that when we saw suppose you tell me let's say Fidelity or things, right? It's the same size, right? But it's almost impossible that you just get rid of the Fidelity. Okay, so here is the companies that are listed. This is the most recent one. 2001 dropped quite a bit. It's small in terms of the total market capital. U.S. market capitalization, it's small. So I'm not saying it is big, but this is the only the part of here, right? So that is small. All right. So these are the Alibaba. These are big names. There's many issues that you probably heard about it, that I'm happy to basically get into the details and then just explain to you more about what's really going on. What is the core issue? First of all, is this so-called working papers of the auditor reports. this SEC and PCAOB, and fight against Chinese government and the CSRC in China side, whether that the investors or auditing here from the United States are able to get access to the working paper, original underlying working paper. And recently there's a surge of discussion on VIE. So VIE is complicated structure, so that it's just a weird structure, to be honest. That basically someone who are here, let's say, owning a share of Alibaba, but actually is really not owning it. It's just owning a company who had a business contract with the true Alibaba in Hangzhou. So that's what's going on, and there's no legal standing. And I would think that from the worst time that I was in China, like the end of June, that's when the DD incident gets out. If you don't know what I'm talking about, I'm happy to explain more. But the DD incident really hurt. I think that's a game changer event, and in terms of the trust between the government and the entrepreneurs and also private capital, I think get to the lowest point because of that event. Okay, there are some national security concerns. That's very real. Those kind of things. I'm Chinese. I feel like Chinese companies, it's very natural for them to do so. Not just for the let's say political, or just for most of the time it's actually for the business perspective. While U.S. allegations is also very real. So I feel like those part of things are just always, there's almost no way to negotiate. While those type of things, probably there are rooms to wiggle. Okay, so here is the U.S. could do. It's the Holding the Foreign Companies Accountable Act. Let's go back to the this PCAOB part. Basically, a company that use accounting firms that cannot be inspected by the PCAOB for 3 consecutive years would be delisted from U.S. security exchanges. Okay, so that's the content. Here the timing was already passed at December 2020. On March 2021, SEC started to implementing that law. That's already written in the law. The most recent news that I read from the Wall Street Journal is that they found a loophole in the law that a delisting will not happen at least by the end of 2025. So it is 4 years of implementation. Okay, I think perhaps this part is probably will be high. I think it will be high because I don't see a clear path so that the Chinese auditing side will make such a concession that it make the U.S. side happy. Okay, and later on I will also tell you that it seems it's not such a big deal. Okay. So here is the one thing that I think a lot of people ask is the issue, like will be those like public pension funds to oh, I'm sorry, I probably should because no, wait, where is the I think. Why I don't see the strange. I'm a veteran here, but somehow that they always is some. So this is my share screen. Huh? I don't see my oh, here. Sorry. Okay, that's the pension fund. There are a lot of discussion on whether should the pension fund be restricted from investing in China or not. I just don't think like, if that's the case, then I will shatter my understanding of the way that the U.S. is, the country as a country, that in the sense that it's really small government, but most of the times that just these institutions make their own decision. If it's a bad idea, they will pull out anyway. So I don't think those type of government initiative will succeed, in the sense that it just, if a market doesn't like it, they will not like it. Okay, so here is this is something that are probably more likely to happen, is on this MSCI thing. So this is Marco Rubio sent some a letter to MSCI. At that time, he argued that it should not be that the from indexes, and MSCI rejected Rubio's request at that time, but it deleted some Chinese company from its indexes in the early this year, and that's those type of things. I think that occasionally it's just the U.S. reaction is a sort of a mixture between the government initiative plus the market, and more or less is from the market itself. Okay, I want to mention that Hong Kong is a great outside option for many Chinese companies. Anyway, it's I did some research that found that the NASDAQ, or it's basically U.S. listed Chinese companies, their liquidity here is actually not high at all. So in a way that it's not clear that that as a Chinese company would like to stay in United States. I think that most of the time that you might hear that why that so many Chinese companies still would like to get to the U.S. to get the IPO. There are many different reasons. I can tell you a lot of stories about the Didi, but one of them, leading one of them, is because initially the capital who is backing these companies initially, they are USD funds. Okay, that's a very simple idea, and that they have the obligation to their own investors to cash in, and that those type of things is just to think about it, is like when Chinese government think this is really the pressure coming from these big investors, they just feel like that's not the way it should go. Okay, so that's the last slide. Financial decoupling, from my perspective, it is happening on the fringe, but I don't think it is going on in a very deep way. The high interest at the stake, the U.S.-China relationship, given Afghanistan, seems to be coming back. It's just all these things is day changing, and global investors seek yields in a post-pandemic world. This is just wanted to go back to the first slide that I was showing you. The interest rate change, together with the potential expectation of the dollar of the RMB appreciation, is very attractive to the foreign investors. They might, given the recent turmoil on the stock market, of the Chinese stock market, they might say, okay, this is just too random, and I don't know what will happen, which industry should I go? So therefore, I'm not investing in the stocks. But most of them will say, yeah, let me just park my cash in the Chinese treasuries, just because there's almost zero uncertainty given there. All right. So this is what I want to talk about it, but I think this is the right time to just stop that my speech, and if you have questions, I'm happy to answer.
Well, Professor He, thank you again for that very intriguing overview of U.S.-China economics in the past few years. I'm going to take advantage of my privilege as moderator to kind of ask the first question here. And actually, I want to go back to that last slide you were on. A really interesting quote. You said you predict the U.S.-China relationship will be competitive when it should be, collaborative when it can be, and adversarial when it must be.
That's what I stolen from from Blinken.
Makes sense. But what part of economics do you think will impact sort of the friends or enemies relationship that U.S. and China sometimes have? When do you see that quote kind of coming into play in the next few years?
I feel like if you think about the business side, I think it's the second part. It's a collaborative part. The Trump administration is, if you talk to any econ side of it, just feel like Trump's simple, I guess, it's just a naive way of understanding economics is totally wrong. It's just the opposite. So I think that currently that it's with the common sense of economics, we'll realize that business, trade, or the things, there's nothing that we should be confronting. There are a lot of parts that the Biden administration has to confront. It's just given why they get elected is because, right, you're saying that we're gonna be very, very proactive on certain issues, and you see all these issues. For instance, those like the geopolitical, like the Taiwan issue. When Taliban things burst, most of the discussion in Chinese forum is on Taiwan. Think about it. Right, it just they make an analogy. You can make an analogy. So what will happen if, and those things must be the diverse. Sorry. Now I don't offer any comments on that. I just say to tell you that those part of geopolitical territory issues are the most sensitive issue. It's almost the third rail in China in Beijing's perspective. So U.S. has to be very, very carefully in dealing with that. Now, when it's get to the competitive, I think it's very clear. It's on data. It's on data and the technology. And I feel like maybe it's the Trump let the U.S. most of part of the wake up seeing that wow, we're not China is no longer a copycat. A lot of people ask me like Zoom, right? Zoom, and people use Zoom. It's pretty good. And one day because the Zoom connection always has some issues in China. So I was proposing to my friends here, colleagues here, saying, let's use Tencent meeting. Okay, Tencent meeting. That's another meeting software that you can do almost the same thing. And then one of my colleagues saying, oh, okay, you guys copied again on Zoom. Okay, copy Zoom. Okay, I told her, no, that's not actually what happened. It's Tencent already developed those things. It's a Zoom as an independent, the boss entrepreneur who started as a Chinese entrepreneur, seeing the opportunity of before the pandemic. Okay, before the pandemic, they took some good part of the Tencent meeting and putting things together, and this is the Zoom. So all these things is just in terms of the logical thinking, it's just you can't use the typical understanding perspective or prior 15 years ago. Okay.
Yeah, my kind of 2 cents on that quote, competitive, collaborative, and adversarial is, I think like a lot of relationships in life, the U.S.-China relationship is very much on a gray scale. It's very complicated. I hear a lot of people say, is China a friend or a foe? Well, it depends on at what particular point we're talking about. I think that this particular situation with Afghanistan, which I won't make any predictions there either, is very telling that there seems to be an interest in sort of taking an adversarial sort of role in certain situations. But us here at USHCA, we see time and time again lots of opportunities for collaborative.
Oh yes, totally. I'm using Afghanistan as example to tell you the true adversarial part is. But for the Afghanistan particular event, you're definitely right. I think this is a good time to build some trust again, because the first thing Beijing said is that Blinken talked to us, and Beijing is reiterating that Xinjiang, there's a big part of the Xinjiang is terrorism. That's the headline news in Beijing that I saw.
Sure. Well, let me move on to one of our pre-submitted questions we got from the audience. And again, I'll say to our current attendees here, if you have any questions, feel free to ask them in the chat or in the Q&A below, and we'll get to them shortly. But I'll take this time to kind of go over a few questions we got from the audience beforehand. So recently, there's been a large number of Chinese regulatory agencies direct intervention on Chinese companies or their affiliated VIE, raising capital in the US, from Ant Group's IPO to the cybersecurity review on DD Global. So their question is, how would such actions affect the capital flow between the US and China in both the short run and the long run? And this is kind of going back to the DD incident you mentioned earlier. Perhaps we could do a brief review of that for our audience, and kind of take it back here to answering this question of how actions like this could affect the capital flow between the US and China.
Mm-hmm.
I can say that again.
Oh, yes, that's good. So this is a very long question. I mean, there's a lot of moving parts there. And if you are not familiar with some acronym like a VIE, you will immediately get lost. I just don't understand what you're talking about. So I'm gonna organize my answer. Perhaps will be long, but let me try. So first of all, VIE is not a recent thing. It's the first thing that first incident that a VIE structure coming out at that time. VIE is an accounting term. It's accounting term. There's a specific term called a VIE in accounting. And why it's called a variable interest entity, who knows? But clearly now everybody understood what's going on. And that's first used when Sina.com gets listed in NASDAQ. The reason is because there's a certain industries that China is not allowing foreign company or foreign people or foreign entity to own them. Let's say one is a content provider. That's so-called a content provider. And the second is a finance. So Sina is a content provider, not just a website, right? The real thing is a content provider. And the DD is on the sort of on now is very clear, but before that it's unclear that a DD, whether DD is in the industry that you cannot have a foreign own. But after the Sina and so many. Then the second question, why that you wanted to, for these companies that you kind of like always go to the United States, is because China's financial market has not been developed so that are able to funding loss negative profits or always loss-making companies. That's just a chicken egg thing, The financial market is not well developed so that they cannot differentiate a good loss-making versus the bad loss-making, but the US can. So as a result, that all these loss-making companies are all very good, like Sina, Sohu, or whatever, Tencent, Alibaba, all these things. That when they get on the listed, they're all loss-making. Okay. So as a result, they would like to come into the United States to get the financing, and that makes the initially huge amount of honeymoon period where people love to put the money in and they become okay. So all these things has been for many years. the current trend seems to be that Beijing would like to rethink about that strategy and potentially, if possible, asking these companies to be listed in Hong Kong. That's just very simple tension, if you want to say. Like it just there's nothing else. Just saying, look, we think that that's fine, but if it's possible, can you do it in Hong Kong? That kind of the talk. So that's what exactly happened before Didi went on IPO. 3 different government agencies talked to Cheng Wei. Cheng Wei is Didi's CEO or biggest owner. They're not CEO. That's the chairman, board chairman. The CEO is Liu Qing. And they talked to Cheng Wei, just expressed that concern, saying, there are a lot of reasons behind it. They could have come up with a lot of reasons, like data privacy, data security. What if United States ask for the auditing thing? Do you provide all these detailed map, all these consumer data to that? All these things that the way that the government agency tell Didi was saying that you need to be prepared on these questions, right? And if possible, can you give us a very full list, detailed list of responses so that we can have a review and decide before you get on the IPO to the United States. Obviously, if you go to Hong Kong, things will be smoother. That's like indicated. Okay. Cheng Wei said yes. And then all of a sudden, without telling anybody, not even Goldman, not even the Invest Bank, who are supposedly to know everything, not even Goldman, these 3 agencies, 3 top government agencies. One is this like telecom, whatever. I know how to say it in China, market regulation, whatever, those things, 3 of them. Cheng Wei didn't tell the 3 private conversations from the government agency to the company, to the invest bank. No, he didn't tell the Alibaba, who was one of the owner of Didi. So Alibaba people didn't know. The only one know is SoftBank. That's the biggest investor. Okay, so given that, it's like, when you get to the situation where when they listed on right before the June 1st, that was the not June 1st, July 1st, right? That's the June 30th. I was in the last day of quarantine. I was in the last day of quarantine. I was in a hotel and I was, thinking about how do I get out. Then I see this big news that the Didi coming out without this like opening bell thing. It's just a super low profile, low key profile. And you realize that something is strange. And then exposed, you see that there was a Chinese media released a statement basically saying that what Cheng Wei has done is something called it's in Chinese. I will say it, if there's some Chinese in the audience, you will immediately get it. It's the Yang Feng Ying Wei. It's like you agree on the face, but kind of like doing the opposite, turn to the back when you're away. That kind of thing, and that is just breaking the unspoken trust between the private entrepreneurs and the government. And why I say so, I can tell you what happened when Ali pulled it out at the last minute, right? When that happened was the end of last year, the end of October. Okay. early December, early November, that basically Beijing was suggesting them not to. It's only suggesting not to get listed, because it's almost like a down, right? It's like money already gets in. Like a lot of people who wanted to buy their IPOs already getting there. So it's just start trading, just to ring the bell. And at that time, if Ali decided to go to the Hong Kong, they could do it. It's not saying that they cannot do it. They cannot do it in Shanghai, clearly, just because, right? It's it's clearly, Shanghai will just cut off. But Hong Kong, you could do it. There's nothing wrong with that, because everything is already there. But during that conversation, it's actually quite smooth. Nobody talk about it, these reported those things, but it's a conversation, make it very smooth. So there's a very unspoken trust between the top Beijing and the private entrepreneurs. Let's just forget about who is wrong, who's right. That there's no point to discuss that. It's just whether that we talk to each other and we say things that people will take it as words, right? Take the words as it is said. But the DD thing is just essentially just to break it that mutual understanding. And you, once given that, you should not be surprised to see that right after the July 1st, that there's several extremely aggressive attempt by the regulators try to kind of like, I wouldn't say retaliation, but it obviously is the thing that within the legal framework that the government agency are able to do against DD. Now, all I'm just telling you is there's a unspoken, I wouldn't say rule, but the way of doing business in China at that level, and has been working for many years. Think about it. It started from Sina, I think it's around 2000, now 20 years, and everybody knew this thing. It's not like something that it gets tricked or not, and it has been working for fine. But this DD thing is really changing the game. It's changing. And after the DD, you realize that all the data law, all these law just gets passed extremely fast, because Beijing realized that maybe that those unspoken rules will not work. If that's not working, what can they do? Right? So they have to come up with stuff that they can confine you. And that explained many of the moves. So that's why, the one question coming out is saying that, can I talk a little more about why I think DD incident is a game changer? That is the reason that I think about it. Go back to Jason's question about the VIE and the flow, capital flow, etc. I do see a long-term trend of pushing the Chinese company to Hong Kong. That's also why that I think Hong Kong still have a lot of bright future. The legal structure that now that Hong Kong has is so close to the international world, so that the people will be confident, will be comfortable in investing in Hong Kong. There's another issue is that you didn't imagine that you listen to my story. I think when I listen to the story that somebody tells me, I raised the one question, which is that why don't these DD just go to Hong Kong? What's wrong with that? Hong Kong still have a pretty good liquidity. I think it's comparable to US, given these small stocks anyway. As I said, in US, Chinese stocks were not having good liquidity at all. Here's the answer. Hong Kong is more stricter. It's stricter than US in listing companies. So for instance, in DD's case, Hong Kong insisted on saying that DD needs to get a license from all the cities
that are operating their business. For instance, I came from Hangzhou, a city close to Hangzhou, Shaoxing. What the Hong Kong exchange are asking is that you need to get a license, a stamp coming from the Shaoxing government. That's very hard to do. I think even Uber cannot get it here. In China, all these Didi, all these like Uber driver were kind of like illegal. It's still the same case. And for US, just because it's more developed in the sense that the US SEC just require you to disclose. If you disclose it right, you're fine. But in Hong Kong, that's way more stricter. So that's the reason why. Okay, but in the long run, I think that that's pretty good dual in the sense that Beijing would think that Hong Kong is someone that we kind of like have a mutual trust, and even if there's some auditing issue going on, they could talk to the regulation department in a more smoother way. But for US, it's just much harder. So that's what I think that most of the capital flow will go to Hong Kong. In the short run, that will happen. In the long run, I am not sure, just because Hong Kong itself has a little bit of uncertainty.
Thank you. I want to go back to VIEs for a moment.
Mm-hmm.
I would like to hear your perspective a little bit about the likelihood that the Chinese government may in the future either restrict or eliminate VIEs, which would that be a concern in terms of foreign investment in Chinese companies?
I wouldn't think that extreme. I don't see any reason why Beijing would like to completely cut off. There's no reason for doing that. It's just almost impossible. I would bet with you is that the China government would like to appropriate the U.S. investors' wealth. That's just really not the goal. It's uncertain industries. That's I think the most affected. So for some industries, maybe they would questioning about this VIE structure. That's possible. It's not the other way to say it. I don't think they will just ban the VIE. That I can bet with you. Now they could use that as a tool to attack certain industry. That's possible, especially those industries that could have some data issues, data security, those things. I can give you one example. So I'm not investing in these stocks, but on my phone, there's always several stocks that they're all VIE, but in a very, very different industries. Let's say one industry is this delivery. Not Meituan, is a delivery company for Ali. Like think about it, like Ali's business, you need a delivery. They're doing pretty well. There's no reason to this is any technology or these security issues. But there I also have some financial companies. I see that people reacted to this possibility. Yeah. So short answer is that no way. And even if they wanted to put it into the legalize it, right? I think they will find a way to make it illegal. I just too much. There's no point. There's no benefit of just appropriating other people's wealth. That's just Beijing will not do that. We definitely will not do that.
Let me turn to another audience question. We received a question from an audience member in the chat. What is the percentage for financial integration between private companies and state-owned companies? They're presuming recently more private companies than SOEs use U.S. financial market.
So I didn't do the very clean. We can go to you guys still can see it right here. PetroChina is the one. I would imagine that this will will have faces some delisting possibility, just because it's just such a typical state-owned company, strategic importance. You guys can see it, right? These are the top guys. And then the second one is the petroleum, China Petroleum. So this is the one. This is the 中石化. If you understand what I'm in Chinese, this is the 中石油. The number 6 is 中石油. So these are the state-owned, clearly, but the China Life is also state-owned. But I don't think those are kind of just. I don't think that like if you put a PetroChina, China Petroleum, I think the Trump administration will pay attention to it, but China Life will not. It's just life insurance. The first two, I hope you do know them. That's clearly has no state ownership, at least from at this point. No, Alibaba situation will improve. You know, if you still hold it, you probably wanted to buy more. Their situation will improve, and it's possible that what the Ant will do is to break it up into different parts, and then form certain joint holding companies to do different businesses. That's but Alibaba itself is remain very independent state. The Chinese government also understood themselves. This is very clear by talking to the top guy. They understand that if everything is under their control in terms of the like asset management, then the innovation part will get hurt quite a bit. So that's something that they when they discuss all the issues, they put it into the very frontier of the discussion. NetEase, that's another kind of like a Sina. Baidu is the same thing. So I just don't think those are the, there might be a little bit of the state-owned there. I actually do not know, especially Baidu. Maybe recently there's some strategic investors. I do not. I saw a Jia Ying saying that China Life are state-owned. Yes, are state-owned. VIE setup is subject to foreign laws. Not China can do nothing. The key issue with okay. It's why is I don't think it's about foreign laws. Maybe I didn't understand the comments here. It's about the China laws. China whether allow the foreign ownership in certain key industry. The most important part is the content provider and the finance. You think about it like if you remember, there's a incidence of Alibaba split out the Ant Financial from their own Alibaba, and Yahoo actually sold them. The excuse, or I can call it excuse or call it a strategic decision by Ma Yun, was exactly citing this problem, saying that it's just illegal for the Yahoo to own Alibaba and Ant Financial. Ant Financial is a part of Alibaba. That's just illegal. So therefore they put it out.
Let me take this back to politics for a moment. We were kind of talking about geopolitics before. Would you assume that geopolitics in the past few years have influenced U.S.-China capital flow trends, and if so, in what regard?
Joe, that is pretty sure, because I do, from my own experience, and I do see several recent papers on that, in the sense that the concern of the CFIUS, review is just discouraging the potential acquisition here.
And I imagine other way around become also a little bit risky. It's unfortunate that I think that, it's unfortunate, also fortunate that I think the most collaborative parts of the US-China perhaps is not those like extremely high-tech or most national security intensive part of it. Most of them are just you can say chips are very, very national security, but to be honest, the most of the application of chips is just a cell phone. And other parts, doing like cotton. And those parts, I don't see too much of the impact. But whenever you have the cars, whenever I have when you buy a company, there's a lot of a patent going on. I do think that these flows gets affected. I don't have a clear number on it, but the delay is clear. Whether it's affected by the COVID because recently, or initially when the trade disputes coming out and the people just want to wait. It's not really just saying that I don't want to, I just want to wait. So it's very hard to distinguish these two parts. But the establishment of CFIUS and also the counterpart of China also doing that, that's just to make it so it's hard to argue against that possibility. The other part is also that the fact that China is thinking about is inward, right? Inward circulation. I'm not sure they're successful in that. The economy growth is not as fast as a lot of economists are expecting. It's just that recent data is really the export really helping quite a bit. So maybe given those numbers, China might change swiftly.
Kind of going off of that, I did want to ask, do you see that capital flow being a possible solution to some of these issues and being able to work this in a way that we could kind of address some of the political tensions between the US and China when it comes to political issues like this?
I wish people can be more practical. I always tell my friends back in China is that most of the people, most of the US people that I talk to are practical. So practical, I meant like money driven. That's just, a little bit of a, and that's what you're trying to say. If we are doing business and we have this common ground and we have this common objective, then let's talk rather than just accusing each other on something that, it's just hard to establish. So on that part, I would imagine that it's really what China would like to engage into. That I firmly believe so. The desire to do that seems to be much lower now, though. So I remember that 20 years ago when I, came here, I came to United States 2001, exactly 20 years ago. And that time was just the opening. Oh, that's before the WTO event. I came here. WTO was the end of 2001, 2000. And for a while, it's like, every local government would like really begging some foreign investment in their territory, right? So for obvious reasons, all these things, that's just really the best time. Nowadays, I don't think that's the KPI for them anymore. So that's good thing, also bad thing. it's also that, let me just give you one example, is that you might think, so used to be that the Hank Paulson, he's a China expert. He was a Goldman boss, and also the Treasury Department, right? Secretary of Treasury of the United States. He is viewed as kind of like a businessman who is doing a lot of business in China. He understands how it works, and it's like a capital people in China, so that you can talk to the, through him, the Chinese leaders can get access to the top guy in the White House. Because of Trump, I do know that Beijing basically just ignored him because he's silent anyway, and I don't see any trend coming back for the Biden. Still, maybe it's just saying that business is just as usual. Maybe it's just like Blinken was saying, those things just you cannot change. As I said, cotton or other things, we just love each other. That's fine. All these things, but there are certain parts that we just keep quarreling against each other.
Sure. Let me kind of take this into try to spin this into more of a positive angle. Two questions we received are kind of on more of a positive outlook. And I'll try to combine them here together. What advice would you give to Chinese companies seeking foreign capital rise in the future? And alternatively, what advice would you have for companies seeking to go into China in terms of a geographic region, if they're looking to diversify or de-risk their supply chains?
I think this is very clear, and don't be intimidated. That's why that I'm part of the reason I come here is to telling you that be more open to read Chinese policy change. And there's another industry that I want to mention is this private education industry. I don't know if you guys pay attention to it. That choose another round, and that's basically it's the last straw that put the global index. These companies took off some of the Chinese companies. If you don't do your homework, you will see super idiosyncratic moves, just not well-founded moves from Beijing, and you realize it's just like, what are you doing here? But for someone who coming from there, I will explain to you that this is a long-term thing. This is like for many years. I wish Beijing could have done that. So one of my friends, after the private education crackdown in Hong Kong, he asked me the following. He said, "Why Beijing do this? This is a stupid move. If they do that, then all the brain drain will happen because they come to the United States." Just so. I told him that it's just so naive. You didn't understand at all what's going on here. I told him, for instance, for people like me, that the one concern that if I want to think about going back is to worry that my kids are getting into this senseless competition of memorizing stuff, like start teaching math, like maybe 3 or 4, something like that, in order to get a spot in the middle, not the middle school, like the elementary school. All these things, and the people don't work, just every day just drive their kids to anyway. So those are the things that I think that this is one example where I think that there's a lot of moves. It's have a well-founded background in China. I have another friend who is who has been in China for many years. He told me that he traveled back to China in '87. He loved there. He stayed there. He's an investor he's just having a having a VC kind of investor and investing a bunch of companies. One company he was investing is called Opticon. It's just basically making the camera for iPhone. So they just is a supplier for the Foxconn who assemble all the Apple phone together. And he has a very strong view on the on some Xinjiang policy that the U.S. policy is. What happened was that his company, he's a portfolio company, he invested in, gets regulated as well by United States. Okay. And I was asking him, you know, what's going on? It's just you're not doing cotton at all. And he was telling me that because we hired a bunch of Uyghurs, and I was shocked by two things. One is that wow, that how did the U.S. know that you like that company actually hired a bunch of Uyghurs? That's the first question. The second question I was asking him, like, in what sense that, you know, are you doing like, you know, a forced labor, blah, 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 all these things. Obviously he denied, you know, I trust him though, that, you know, there's no force, just to pay the regular wage, and a lot of people would like to come. So that's the thing. The first question he said, that's also, he was very surprised that actually, you know, somehow that the U.S. Intelligence know, and then that's later. But all these type of things that I think that, you know, your question is how did you help these entrepreneurs to capital? I think that it's very important to read the policy trend and understand the policy trend in a bigger picture perspective. Chinese government are very, very much like doing something real, like a real in the sense that a clear business model, clear technology improvement, and a clear case to be made that you solve some pain point of the business, like the supply chain, many other things. You know, I don't have a good example on that, but if you understand the trend on that, you will be able to do a very smooth business there. The people will help you, all these things. It will be dangerous to just, you know, think about the read like a news from 2 years ago. That is the most dangerous way to do. You need to, you know, I'm not just saying you read it the last month is enough. No, you need to read the whole 5 year or 10 year and see where it's going. That is what I'm suggesting.
You know, that's not surprising me at all. We've heard in some of these China business seminars, when entering China, one of the most important things you need to do is to do your homework and to make sure you're educated on whatever
Yes.
industry you're in, the
Yes.
policy trends that are going on there, and to, you know, make sure that you're up to date, because it changes a lot, and it's something that depending on what country you're from, you may not be familiar with. And if you can't do it, hire a lawyer friend to do it, because it is very important. So
that's very true. Yes. And with good homework, you will start to not only start to get a sympathy on certain brutal moves by the government, but also you're able to find the new opportunity.
So I'll ask one big question here, and I think this is kind of an intriguing question. This one we received from our audience ahead of time. I'll kind of just read it verbatim. What implications does capital flow from US to China have for the future of the current US homogeny and Sino-US rivalry? And I know you were kind of making some predictions earlier about market trends in the future and where that'll head, but do you think that capital flow will have an impact on kind of the current US-China dominance competition?
Mm-hmm. Just can you clarify a little bit more on the exact question?
Sure. Based off of some of your, and I apologize for the sorry, in the background, part of living in Chicago. What implications does capital flow have for the future of U.S.-China relations, particularly in the regard of political tensions and?
I see.
Kind of,
Okay. I don't think capital flow will, as I said, that these CFIUS, all these things, there's a certain industries become much harder. And there are still new industry growth that the capitals, I mentioned that most of the companies are still seeking the first opportunity going to the US to do IPO. It's because of the many US dollar funds that many of my friends are managing. They're not, they are super sensitive to this policy trend. And now they're trying to invest more in this so-called hardcore technology. In Chinese, it's called 硬核科技. 硬核科技, like, it's not finance. It's not a real estate. Okay, it's not the consumer whatever, make a consumer a little more like to buy that kind of, like, let's say Pinduoduo, clearly it's not part of it. But if you do some like a gene test, right, it's COVID, biometric kind of thing, then you're part of it. The more and more people are just investing in these industries, and I imagine, it's a little bit riskier in the following sense that China does not have like obvious late mover advantage, right? But you think about it, it's like this is what the country needs in a way. As a result, these companies, as long as they get moving, they will be will get all the profits and they will get a reward. In what sense that these things are helping? I think it's just, I still think when I read all these historical books by US-China relationship, these questions, it has been always there. I didn't know that. To be honest, before this recent US-China conflict, I always thought that that's the honeymoon. But turned out or not. When you read in the past, the same issues coming again. If anything, in this current status, is actually much better in the 84, right? In the 84, because both sides seeing clear reason to maintain talks. Not like in the old time when Mao Zedong was there. Just we want our independence. Whatever you do, we just there's a lot of saying. It's like saying we could forgive. Just think about it. It's like we wanted to be self-reliant in order for us to stand up in the next 10 years. That kind of thing. It's just from an economist's perspective, that's not a wise move, to be honest. And at that time, they would like to do it just because in the sense that it's unclear that how things are going to work out. And now we know, and there's a very easy way to work together. Now, that's why I put Blinken's points there. Is a very good guidance there. We draw the line, and sometimes the line could go boundary. And the capital movement, all these things are very invisible forces that can shape a lot of discussion. Whenever they do very crazy moves, they're going to think about it.
I hear kind of the difference between the desire to stand alone and support yourself, and also this necessity to working together. From an economics perspective, what are the clear reasons to work together? What do you think has changed in recent years that has made that more visible? And what made it so invisible in the past?
This is a good question. It could have the visible part is probably that the China growth model, people see that how it works. Now we get to the now the situation, people seems like you need to constantly updating your knowledge about China. And often the time I saw a lot of experts, so-called experts, but they never lived in China. I do just always never don't think that you are real experts. They only talk to like, let's say, in Beijing, Shanghai people. They are very, very different people, right? So in that sense. So, but I also do have friends who really, they live in the third tier cities. What is the biggest change? I do think is the attitude of, from my perspective, I initially thought it was the attitude of the US people changed, because I only saw before Trump, after Trump. But then I read a lot of books. I realized perhaps that's not changing at all. What really has changed is on the other side of the China that I personally, I know from the, in the past, is that, for instance, that my colleague also have that feeling, is that in the old times, that if the US experts going back to China, they will be highly respected. And just because that, at that time that there's a very, very anxiety to learn from the US. How did the US do it? Okay. Recently, I don't feel that desire at all. If anything, they're gonna ask, why this will work? Why this will work? In some sense, is China has been experimenting one or the other sometimes, and they accumulated a certain knowledge on that. As a result, that they will try to draw the connection between the failure and the success and make their own move. So in that sense, that makes the connection a little bit more, careful, and in that sense, it's the invisible part to make it harder.
Sure. Yeah. Thank you for explaining that. So I'll ask one last small question. This is an exercise we do often with events like this. If you had a minute with President Biden or President Xi, what is the one thing you would say in 60 seconds to try to solidify this collaborative effort between the US and China? What would you use your 60 seconds to tell them?
Okay. I tell them. So I don't think I will be able to talk to Xi. Okay, first of all, let me try to talk to Biden. Maybe that's, in terms of the chance, I think the talk to Biden is a bigger chance than talk to Xi, I feel. Sure. It's ironic a little bit. I think that it's really on the kind of like the attitude of China is basically let us alone, that kind of attitude. Mm-hmm. Which is not appreciated by the US people at all. And it's exactly those type of things that are getting to the, for instance, like one of my colleagues, Chang Tai, he recently wrote an op-ed just saying, look, if China wants to do the SOE, just let them do it. It's just not efficient at all from our study. Why don't you just let them do it? Why do you just intervene saying, no, please don't do that? come on. Those type of issues. It's just that, yeah, they are doing stupid things. Fine, just talk to us, and this is what we're gonna do. And if you do that, fine, let you do it. But I feel like the United States, no, they just don't want to do it. And there's a lot of other reasons, like human rights, all these things, blah 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 blah. But on the top of their head, it seems to be that there's a way to do it right, and then people get to the conflict of saying, I think that kind of I think that this is what our top leaders was saying. It's the mutual respect is on this part of it, and I don't think U.S. is acknowledging the fact that let somebody alone is one of the biggest respect that you can offer to it.
I think that understanding is something that needs to take place, because we live in very different cultures, very different government systems, but none of those are reasons that collaboration shouldn't happen, because there's certainly a lot of benefits that can come from having that.
Yeah.
So I understand that we are at the top of our time. Professor He, I want to thank you again for this.
Thank you.
Today.
Thank you for this very interactive conversation.
Yes,
yeah.
Thank you so much.
Okay.
Thank you to our audience for participating.
Yeah.
Thank you to the University of Chicago for helping promote this event and being able to work with us. I want to wish everyone a good night. Thank you so much again.
Thank you. Thank you for coming.
Thank you.
Bye-bye.
All right, have a good night, everyone.